the most powerful economic official in the world, is now the target of a federal criminal probe. This is not a drill. The Wall Street Journal has just broken the story that U.S. federal prosecutors have opened a criminal investigation into Jerome Powell, the chairman of the Federal Reserve. We are talking about the man who controls the levers of the entire American economy: interest rates, money supply, bank regulation. His every word moves global markets. And now he is under investigation. This is a seismic event for your wallet, your mortgage, your retirement account, and the stability of the entire financial system. The details are shocking, and the implications are staggering. Stay with us. To understand why this is an earthquake, you need to understand who Jerome Powell is and the sacred trust of his office. The Federal Reserve is designed to be independent. It's supposed to be insulated from political pressure to make tough, often unpopular, decisions to control inflation and maintain employment. Jerome J. Powell, a Republican appointed by President Trump and later renominated by President Biden, has been the Fed chair since 2018. He steered the economy through the pandemic, unleashing trillions in stimulus. Then he embarked on the most aggressive interest rate hiking campaign in decades to fight inflation. But this investigation doesn't spring from those policy decisions. According to the initial reports, the probe appears to center on his personal financial conduct. The context here is critical. In 2021 and 2022, several Fed officials faced intense scrutiny and resigned after revelations about their personal trading during the pandemic. Regional bank presidents Robert Kaplan of Dallas and Eric Rosengren of Boston stepped down after it was revealed they actively traded stocks and real estate investment trusts while the Fed was making market-moving decisions. This sparked a major ethics scandal. In response, Chairman Powell instituted sweeping new rules in late 2021. The new policy banned top Fed officials, including Powell himself and all regional bank presidents, from purchasing individual stocks and bonds. They were restricted to broad-based investment funds like mutual funds. They also faced longer, blackout periods around Fed meetings and new disclosure requirements. Powell called these rules a substantial step forward. He said they would, quote, help assure the public we serve that all of our senior officials maintain a single-minded focus on the public mission of the Federal Reserve. This investigation now calls that very assurance into question. Here is what we know right now, based on the initial Wall Street Journal report and subsequent confirmations. The investigation is being conducted by prosecutors from the Justice Department's Public Integrity Unit, the same division that handles corruption cases against public officials. It is a criminal investigation, not an internal ethics review. This is a serious legal escalation. The core of the probe reportedly involves trades made by Powell in 2020, during the height of the market turmoil and massive Fed intervention. The focus is on whether Powell properly disclosed these transactions in accordance with federal ethics laws. Specifically, investigators are examining a series of sales from a family trust. In 2020, Powell sold between $1 million and $5 million worth of shares in a broad-based stock index fund. He also purchased between $1 million and $5 million in the same type of fund later that same year. On the surface, these were trades in permitted, diversified funds, not individual stocks. However, the legal question hinges on the timing and the paperwork. Federal law requires prompt disclosure of such transactions by senior officials. Powell's trades were listed on his annual financial disclosure report filed in May 2021, covering 2020. The question prosecutors are asking, was that disclosure prompt enough? Did it comply with the exact letter of the law, which can require disclosure within 30 or 45 days? Furthermore, are they examining the context of those trades relative to the Fed's unprecedented market support actions at that time? The Fed has issued a statement. A spokesperson said, "The chair has always adhered to his ethical obligations and the law. He has fully cooperated with the government's investigation. We are confident that a full and fair review will confirm that his actions have been appropriate." Notably, they did not deny the existence of the investigation. Jerome Powell himself has not made a public statement as of this reporting. Key statistic, according to his disclosures, Powell's net worth is estimated between $20 million and $55 million, largely built during his career as an investment banker and private equity executive before joining the Fed. This context is important. These were not trades made by a civil servant living paycheck to paycheck. They were moves within a multi-million-dollar portfolio managed by the head of the central bank during a period of extreme economic crisis. The reaction has been immediate and polarized, splitting sharply along political lines. Congressional Republicans, many of whom have been critical of Powell's interest rate policies, have pounced. House Oversight Committee Chairman James Comer stated, "This is a grave and alarming development. The American people deserve absolute transparency from the Federal Reserve Chairman. We will be following this Justice Department investigation closely and will not hesitate to launch our own inquiry." It reframes the political narrative around Powell, potentially giving lawmakers ammunition to challenge his future decisions or his potential renomination should he seek another term. Democratic responses have been more measured but still express deep concern. Senator Elizabeth Warren, a longtime critic of the Fed's ethics and a key figure in pushing for the 2021 trading reforms, said, "I have been sounding the alarm about ethics at the Fed for years. This news is deeply troubling and underscores the need for even stronger, enforceable rules and real accountability." The White House has offered a tepid statement of support, with Press Secretary Karine Jean-Pierre saying the president continues to have confidence in Chair Powell, but notably did not comment on the investigation itself. Internationally, the news has sent a ripple of anxiety through central banking circles. The Bank for International Settlements, often called the central bank for central banks, emphasizes integrity and public trust as foundational. A criminal probe into the Fed chair undermines that global perception of technocratic stability. Market analysts in London and Hong Kong have noted that while the immediate market reaction was muted, the long-term risk is a political contamination of the Fed's independence. If Powell is seen as weakened or distracted, or if future policy decisions are questioned through the lens of this scandal, it could introduce a new layer of volatility. The deeper analysis here is about the perception of hypocrisy. Powell stood before Congress and the American people in late 2021, announcing strict new rules to restore trust after the trading scandals of his subordinates. He positioned himself as the cleaner, the reformer. If he is now found to have potentially violated disclosure rules himself during that very period of crisis, it fundamentally damages the moral authority of the entire institution. It's not just about the legal technicality of a disclosure form, it's about the credibility of the person who is the face of the American economy to the world. Let's get straight to how this affects you, the ordinary person. First, and most directly, market uncertainty. The Fed's number one currency is confidence. If confidence in its leadership erodes, markets get jittery. That can mean more volatility in your 401 or pension fund. It can mean lenders get nervous, potentially making it harder or more expensive to get a loan for a car or a small business. Second, and more critically, monetary policy. The Fed is at an incredibly delicate moment. After hiking rates to a 23-year high, they are debating when to start cutting them. Every word from Powell is parsed by millions of computers. If he is perceived as politically vulnerable or legally distracted, it could distort his decision-making. Will he make a policy choice to appear tough to prove his integrity? Or will he become overly cautious? This investigation creates a cloud of uncertainty over every future interest rate decision, and those decisions directly impact your mortgage rate, your credit card APR, and the cost of financing everything. Third, the political firestorm. The Fed's independence is its shield. If that shield is cracked, politicians from both parties may feel emboldened to attack its decisions more aggressively. We could see more bills in Congress to audit the Fed or change its mandate, creating long-term instability. For the average family, a politicized Fed often leads to worse economic outcomes, either letting inflation run too hot for too long or choking off growth prematurely to prove a point. What happens next? The Justice Department investigation will proceed quietly. Powell will likely continue in his role, but every public appearance will now include questions about this probe. The next Federal Open Market Committee meeting will be dominated by this story, not just the economic data. There's also a real possibility of congressional hearings, dragging Powell to Capitol Hill for what would be brutally partisan questioning. The path forward is now fraught with legal and political landmines that did not exist last week. We've been speaking with former federal prosecutors and financial ethics experts to get their read. Sarah Miller, a former DOJ public integrity prosecutor, told us, "The mere opening of a criminal investigation at this level is extraordinary. The Public Integrity Unit doesn't do this lightly. They likely have reason to believe there is evidence of a knowing violation, not just a paperwork error. The key will be proving intent." This suggests the legal bar is high, but the DOJ would not take this step without significant cause. David Skeel, a corporate law professor and Fed historian, offered this analysis. Historically, the sanctity of the Fed chair's office has been preserved. This is uncharted territory. The closest parallel might be the investigations into Nixon-era Fed Chair Arthur Burns over political interference, but not a criminal probe of the chair's personal conduct. This is a first, and it sets a dangerous precedent that could make future qualified candidates think twice about taking the job. Market strategist Lynette Lopez provided the investor perspective. The immediate market reaction has been contained because the charges seem technical, but the risk premium on U.S. economic governance just went up. International holders of U.S. debt, like Japan and China, watch this closely. Their confidence in the institutional stability of the U.S. is paramount. This probe, regardless of outcome, chips away at that. The consensus among experts is that the damage to the Fed's reputation may already be done, and the legal process will be long, slow, and incredibly damaging to public trust. The key takeaway, the bedrock institution of the American economy, is facing a crisis of confidence at its very top. This is no longer about trading scandals of lower-level officials. The spotlight is directly on the chair himself. What to watch for? Any statements from the Justice Department, Powell's demeanor at his next press conference, and whether any lawmakers formally call for his resignation. The stability of your financial future is now intertwined with a federal criminal investigation. We will stay on this story and bring you every development. Subscribe to Kenya News Update today for more breaking news.